Bitcoin to $60,000 or lower? Watch this.
I think you'd easily go to 60.
In this episode, we dive into this prediction and we talk about noise versus signal and so much more that is happening in the Bitcoin world right now. I know you're going to love this episode. If you don't already, like and subscribe, and let's get into it. Bish, welcome to 2026. Welcome back to the show. How are you, my man?
Good, brother. Always a pleasure to chat with yourself and energized to take on a new calendar year with the Unemployable crew.
Mate, I tell you what, there's never a dull day in crypto. For context, we're recording this on January 21st, 2026, and we have just seen another 5% candle in a day. Not a kind that we enjoy. Let's just put it on the record, on the tape for people so they've got context. It is currently trading just under 89,000 US dollars a coin, 88,974 when I look in CoinStats. So Bish, what do you make of it? We've seen a week of downward flows again, down 6.5% just for the week. What's going on, mate? What are you seeing on the desk? What are you telling clients? And then I've got some stuff I want to dive into, some thoughts I have as we go through this, I guess mini bear or bear market, and I'd love to chat to you about those as well. So give us the update from the storm rank coalface and what you guys are talking about.
Absolutely. So on the trading floor, we've definitely seen, I guess, the bulk of the fear and the negative sentiment that was in the market around November. When we first went from 126 in early October down to a low of 80,000, that's when I would have seen peak fear. There was a lot of inbound calls at that time. People were saying, "What's going on? Should I be selling? Should I be rotating out?" That's when I would say that was when the sentiment was at its worst. More so recently, what we found is that the sentiment has slightly improved in Bitcoin and crypto. It's just that we've seen such massive outperformance both in the stock market with tech stocks and even traditional S&P 500, as well as a massive outperformance in precious metals, which has been the major cause of negative sentiment, at least locally, is because we've had this perfect storm in a teacup, which should have sent Bitcoin well and truly north of 200, 250,000 in terms of the investment thesis. But where it's actually unfolded is that it's actually played out in the precious metals market first. And then that's when we're anticipating a catch-up move in Bitcoin. But the sentiment over the desk over the last few weeks, we're actually seeing a bit of early bullish green shoots. So whilst people had a rough close to 2025, the sentiment as of now has been, where should we put our limit orders? Where should our dollar cost averaging start? What should be the capital deployment size? So whereas before, the conversations in late November, even early December, was around, should I be selling? Should I be exiting the market? Should I wait for a better time to come back? Now the conversations have been a bit more around, look, we're ready to deploy capital. We're excited to come into the space, but they're just being a bit conservative. They think that they can walk away with more Bitcoin for their dollars by being patient and having some sort of limit order or dollar cost averaging strategy, which has been a nice turn in the market. From a technical perspective, which is what I'd love to kind of riff with you about as well, a bit of the technicals and fundamentals, is that whilst the market and the charts look completely like dog's breakfast, I actually like the fundamentals now more than ever before, because we're seeing this bifurcation in US dollar hegemony. We're seeing a lot of politicking, particularly around the moves around Greenland. We're seeing Japanese bond yields just going vertical. We talked about that quite extensively last time around. And Bitcoin has never been, in my humble opinion, cheaper than where it is today relative to global assets and global liquidity. And so that's where I feel that there's a mismatch between price and value. So whilst price is 88,000 and not looking, all that stellar, the mismatch between where I anticipate us to be is quite attractive. And that's something I'd love to unpack with you as well, because I love your perspective and your analysis as well.
Just looking at it from, I'm just thinking about audience. So they're mostly everyday investors. They're not sophisticated in the sense that they spend all day watching Bitcoin videos. They don't spend time analyzing charts. They're busy working, running businesses, working in jobs, and trying to grow their net worth over time through investing. And so from that perspective, like I guess what they're top of mind for them right now is why isn't Bitcoin pumping? What's driving this downward pressure right now? Because we trust Adam and we trust Bish and we're excited about it and we've read the books and watched the videos. Everything else seems to be running. Why is Bitcoin lagging so hard? Did I buy too late? Have I missed the train? Is this yet another example of me being emotional and I'm going to lose again, which is so many people's reality that are coming out of working class roots and trying to get ahead through crypto. So what do you have a thesis for, like, why we're not seeing it specifically right now? Like what's going on right now in the markets that they could make sense of it with? And I've got some other stuff to talk about it as well.
Yeah, I mean, the two main reasons, in my humble opinion, is one, it's what we talked about last time when I was on the show, which is the Japanese bond yields absolutely spiking and ripping through the roof. Because again, and I'm happy to unpack it for those who didn't watch it, Japan for the last decade and a half has been the world's cheap credit factory. It's where massive institutions and even large, sophisticated, high net wealth individuals would go and park a lot of their capital, borrow against their US dollars, borrow against their US treasuries, because when you borrow in Japan, the interest rates were at zero. You could afford to borrow a boatload of capital and have pretty much close to no cost of borrow. So it was a no-brainer of a trade. And then you would take all of that free, cheap capital and you would put it back into the system. You'd buy real estate, you'd buy assets such as Bitcoin, US assets such as equities like technology assets, Nvidia, Apple, Microsoft, the whole shebang. And then what happened is over the last little while is we've been seeing what is known as a sovereign debt crisis. What that effectively means for those who are just watching at home, and maybe that's the first time you've heard somebody string those words together, it's essentially when global markets do not believe governments are in a position to repay the debt that is owed to them. So in capital markets, one of the biggest markets in the world is the bond market, but you don't hear about it a lot in headlines because it's not a very sexy market, but it's what drives the price of everything because it's what is known as the risk-free rate. So in America, they're holding about $38 trillion worth of debt, and their debt to GDP ratio is about 120%. Japan's a little bit worse. Their debt to GDP ratio is over 200%. So when bond investors or institutions no longer feel that the government that they've lent the money towards and they're earning, say, 2%, 3%, 4% yield on borrowing to the government or lending to the government, because the likelihood of a government becoming insolvent is very slim. And so they can essentially give to the government billions upon billions of dollars with the fact that 20, 30, 40 years from now, they're going to still be around in order to repay that initial loan that was provided to them. Now, what's happening is that they're feeling like, yes, they can repay us on a nominal basis, but they're worried about hyperinflation. So that's when the government, such as the Bank of Japan, will print a boatload of Japanese yen and repay investors their owed loan. But because the yen is worth 30, 40, 50% less than what the loan was initially lent to them, they've lost out in a big way. So they were made whole on a nominal basis, but the actual purchasing power has been eroded away. Same deal with America. So America's debt market is $100 trillion. To give you an idea, that's 55 times larger than the Bitcoin market is. So any small fluctuation in the yields in America or Japan downstream will have a magnified effect on the price of assets such as US technology assets and Bitcoin, of course, as well, being a much smaller asset class. So that's the number one driver, is the concern around large sovereigns such as America, Japan, being able to repay their debt in a nominal basis. And so people are exiting the system. And that exit would, I believe, will eventually be Bitcoin, but it hasn't been the first go-to choice. Institutions are flocking towards precious metals, particularly gold and more recently silver, as that has been money for 5,000 years. So in periods of crisis, when large sovereigns, whether it be the Roman Empire, whether it was the British Empire, the Dutch or Spanish empires, and now more recently the American Empire, is looking unlikely to repay its debts, people exit those economies and go into a neutral asset that neutral asset has always been gold. We haven't had Bitcoin before. For 5,000 years, it was always just shiny rocks that we pulled out of the ground. I believe that that transition into Bitcoin will play, that's where the catch up trade will be. But answering the first part is sovereign debt is the biggest concern, and that's what's driving on it. And secondly, we've been correlated with risk assets for the last few years. So, especially since the COVID injection, the liquidity injection that came in at that time, Bitcoin has been trading in lockstep with technology assets. So the correlation should have had us ending up a lot higher. But the 10th of October, which was that large liquidation cascade that we had seen, broke that correlation, unfortunately, to the downside. So it's a twofold factor where I believe it's just short term. It's not a long term positioning that will affect Bitcoin's price. But short term, there's a lot of concern about sovereigns being able to repay their debt. So people are flocking to gold and silver. Therefore, Bitcoin isn't yet treated as a safe haven asset, so it's not catching that bid. And more recently, it's been trading as a high risk technology play. And because that correlation was quite high over the last 5 years, and then we add on top of that the leverage cascade that we had on the 10th of October, you've got this really weird middle child syndrome unfolding at the moment, where it's not quite a safe haven play like gold and silver is, and it's not quite a risk on play such as the technology assets that we've seen. And it's kind of breaking away from that risk on correlation and trying to move towards that risk off play. But that's why it's kind of in this weird limbo land where we've been trading between 88K and 94K for the last 2 months. But that flip, when it comes, that repricing is going to be incredibly epic. It's going to be quite fast. But right now, the reason why the price has not quite caught up with the fundamentals is because of the localized liquidation cascade on the 10th of October. And then also the fact that we're seeing a lot of risk off sentiment in the market. So you have that is really what's led us to that price point at that on Bitcoin today.
One of the greatest gifts that Bitcoin gives us is the ability to be completely sovereign and to never have to rely on a third party to access or move our economic power that is given to us through Bitcoin. It is so critical, in my opinion, that you learn to be a proper sovereign Bitcoin holder through self-custody, meaning you do not leave your Bitcoin on exchanges, you do not entrust it to any third party of any kind, whether it be a bank or a professional Bitcoin custodial service that will charge you a percentage of your Bitcoin stack. If you learn to do it yourself, you are free. You can travel freely. You are in charge of your own money, and nobody can ever get between you and your stored economic power. In my opinion, the best people in the world to teach you how to do this step by step, because let's face it, for most of us, custodying our own money without any banks or anybody else involved is brand new, it's overwhelming, and frankly, it can be scary. But if you work with the team at the Bitcoin Way, their team of experts will work with you one-on-one. I'm a client of theirs. I went through the exact same process, and they trained me to become my own chief financial security officer. And now I'm completely free and educated. My Bitcoin is stored securely using air-gapped wallets and a complete protocol, including how to transition it to my family in the event of me dying. It's an amazing, amazing service. Go to the bitcoinway.com/unemployable. That is thebitcoinway.com/unemployable for your free consultation today. I hope you're enjoying the pod. Now let's get back to it. So Bish, that makes a lot of sense. And I think it adds a really important perspective for people to be reminded of with Bitcoin, because what we're looking at when we look at Bitcoin is an asset that's say 16, 17 years old, and it's playing, with as a reserve asset, it's playing with gold, which is thousands of years old. And as a technology, it's playing against, really established technology stocks and things like that. So it's this sort of middle child analogy is actually quite powerful. And I think, as always with these things, perspective is so, so important. In a minute, I want to play you a clip from Luke Groman. I don't know if you saw his interview with Natalie Brunell. I'm going to play you a clip from him in a second. But I just wanted to offer just everyday listeners a little bit of context as well, because I think it's easy to narrow in to a very short time window with Bitcoin and for a lot of people, especially Australians, they're used to investing in real estate and not into digital assets or stocks as much. And the problem with digital assets is you can see the price every single second of the day. You're checking coin stats every 5 minutes like a fiend, and it really can be an emotional roller coaster. So I just wanted to provide a little bit of context for people around this volatility. So, you know, a big, I think, event in our lifetime was COVID. It really officially started at the start of 2020. We saw the outbreaks at the end of 2019, and then 2020 was when it sort of started to take full effect. And it seems like yesterday, but it's now 5 years ago, right? We're now in 2026. It's half a decade, right? It's crazy. And what I wanted to do is just add some context for people around time frame. So in 2020, let's just assume, I want to give people some context around the risk of holding cash to start with, and then I want to talk about where Bitcoin was and where it is now. If you were to believe that inflation is only 5%, which I don't believe any Australian believes that the real inflation is only 5%, but let's say it has been only 5% since COVID, we're halfway through a decade. So if we extend that out to 10 years, I went on to ChatGPT last night. If you had saved your money in just fiat cash from the January 1st, 2020, in 10 years' time, and we're halfway through it, this is not a maybe, this is statistically just hard encoded math that cash relies on, our monetary system relies on, is engineered to be inflationary, more money going into the system. At 5%, the cash that you're holding today is worth 40% less at the end of that journey, which is just wild. Basically, it means you've got to work almost twice as hard to get the same amount of money, so that the cash asset is down 40%, right? If you look at Bitcoin, and we're only halfway through that journey, that's cash over a decade. If you look at Bitcoin back then, do you recall off the top of your head, Bish, like what Bitcoin was trading at that time, January 1st, 2020, just ballpark?
I think it was trading around 9,500, just shy of 10K at that time.
Yeah, 7,200, right?
Yeah.
So it was trading at 7,200 just 5 years ago. And today we're sitting here going, oh my God, people are freaking out at 87,000, right? It's literally a 10x in the same time that our cash is mathematically programmed to halve in value in just 1 decade, right? So if you hold that shit coin called the Australian dollar, it is not a maybe, it is programmed into the system. The Reserve Bank target is 3% theft a year. Oh, sorry, I mean inflation a year. It's programmatic monetary policy, right? So first of all, if you've bought Bitcoin and you're down temporarily right now, don't stress. Just know that it's not programmatically, it's actually programmatically designed to be less of it. So anyway, even in these bear times where everybody's nervous, we're still up 10x in just those 5 years. So the old saying, if in doubt, zoom out. And I wanted to just give one other analogy, which is around real estate for the people right now, because people get these shiny object theories in their head, or suffer from it. You know, they chase literally at the moment the shiny object of gold. And I'm super happy for gold investors. And Bitcoiners and gold investors actually have a lot more in common than what a lot of people would dare to admit, because we both believe in hard money, real asset, real value, proof of work, right? A piece of gold is proof that somebody has gone and dug a hole in the ground and exerted real world energy to extract it, in the same way that mining a Bitcoin does. But I wanted to just share a quick property analogy for those of you who feel you're missing the bus because you've got $200,000 in Bitcoin and you could have it in real estate. So as you know, Bish and Neep and I was a big industrial investor, and I sold everything and moved to Europe and overseas. And I sold one of my properties at the very peak post-COVID, when commercial properties were trading at a yield of 3.3%, meaning that for if you have $100,000 of income on a commercial building, because interest rates were so low and people weren't getting returns on term deposits in banks, everybody pulled all their money out of banks and put it wherever they could get a better return than like the 1% term deposit that you'd get.
Yeah.
They all rushed into real estate. And what that meant is that they would pay more and more and more for real estate income as long as it was more on a percentage basis. And so for every $100,000 of income that you have on a commercial building at a 3.3% yield, which is, like, put that in perspective, about a year before, buildings were trading for 7%, and commercial buildings are largely just sold on a return basis, right? It's not how good looking the shed is, it's how much money it produces.
Yeah.
So if you have $100,000 of income off a commercial property and people are prepared to pay you, you put 0.03, I'm just trying to think what it is, 100,000,
3,300.
yeah, times 0.033. No, that's not right. I'm just trying to do math. I've been out of the market for so long now. Divided by, I should have done this off camera. Yeah, so basically, I think it's, if you've got they pay you $3 million for the property, because $100,000 is 3% return on a $3 million property. Is that correct?
Yeah, that's right. So
That's right.
yeah.
Yeah. So they'll pay you $3 million. So at the absolute peak of prices of commercial property in Australia, you know, for $100,000 of rental income, you'll get $3 million for the building. What happened was, after that, interest rates just got put up, right? And of course, when the interest rates went back up, all that money flooded back into term deposits and other assets, and people were prepared to pay less for commercial buildings. And right now, commercial buildings on the Gold Coast trade for about 6%. So if you had that same $100,000 of income divided by 0.06, you'd get 1.6 million for that property. So at the peak, I was able to sell some of my buildings at $3 million for every 100,000 of income. And today, that, just by waiting, same building, same tenant, same income, will trade at about 1.6. So they've literally halved in value in the last 3 years. Isn't that wild to think about?
That's insanity.
And I know, and this again, why people say, oh, Bitcoin is, you know, down from all-time high at 120. I'm like, dude, I literally experienced this because I sold one of my buildings on a yield of 3.3%. And then the best building in my portfolio, I kept. And I kept it for another year and a half, thinking, oh, I don't know, I should just hang on to one of my properties. I kept the best building. Had I sold it at 3.3% yield on the same day that I sold my other buildings, which were all cleared on the same day at the same auction, and I had buyers waiting in the room going, we missed out on Adam's other buildings, there's going to be a war over this last one. I pulled it off the market with a room full of bidders. I pulled it off the market thinking I'll just hang on to it for security. I could have sold it that day for nearly $9 million based on the yields that had just been paid for two of my other buildings. I waited a year and I sold it for $5 million. So I just want people to dispel this myth that Australian real estate doesn't go down in price. Yeah, it does. I can tell you from firsthand experience. You just don't see it in the CoinStats app every day. So just, guys, zoom out, have some patience. There are big macro factors, which Bish is explaining to us here, of how the world works. But we don't, for most people listening to this podcast, you are not traders, as in you don't watch videos and charts all day and buy here and then sell there and then come back in. You've got to understand the fundamentals of Bitcoin or gold or whatever it is that you own, and then just understand these things, listen to these podcasts, but understand the underlying thesis of why you own the thing. All this stuff in the middle is noise. And what we look for as long-term Bitcoin is what we call signal, which is why we call the show the SAT signal. Signal is what's happening overall. And what Bish is saying, if you look at the signal, what he's explained is the noise, the machinations of what's going on. But the signal is the world is in enormous unrest at the moment. And when things like sovereign debt crises occur, that's when people go to fundamentals. And if you don't know the fundamentals of why Bitcoin is such a safe, programmatic, the right bet, then you're still not really a Bitcoiner, because the signal is all of this plays right into the hands of a global monetary settlement network that cannot be controlled by any one power, that is absolutely transparent, is settled every 10 minutes on chain. Like all these machinations of the Venezuelan oil capture and all these things that are going on, there's so much shadow and unaudited transactional things going on at a geopolitical level. Bitcoin doesn't have any of that. It's all crystal clear, and this is why we back that eventually the right solution will rise. So just what I want to do is I want to play this quick clip. So Luke Gromen, for those of you who've never heard of Luke Gromen is actually a Bitcoiner, but he believes in the technology absolutely, and he's also a professional investor. He advises institutional investors, but he's what I call a swing trader, which means he tries to buy Bitcoin when he believes that the swing and the sentiment is extremely low, and then he tries to sell it near the top and capture most of the fat in the middle. But he fundamentally believes in Bitcoin, and he loves Bitcoin as an asset. So he's being interviewed by Natalie Brunell, who has a podcast called Coin Stories. Natalie's one of the few female voices at scale and is a really lovely person, very smart. But he says something in here that he believes that Bitcoin could go down to $60,000 or even lower. And I'd love to get your take on this. And this will just go for a few minutes, just maybe 3 minutes, because I think our listeners would do well to listen to this and think, even if you hear that, should you wait? Should you buy anyway? And you can see Natalie sort of struggling with it as it's happening. I'll get your take on it afterwards.
On the Bitcoin side, though, you predict this whoosh down. It feels like from when I read your writing that it's almost imminent, like this year, next couple of quarters before this nuclear print comes. So I'm assuming you would maybe want to get back into Bitcoin before the nuclear print and it really takes off, right? So is that still the way you're thinking about it? Are you looking for a certain price? Like when everything crashes, I'm thinking back on the recent ones when we had 2022 or even during the COVID crash. Things went down temporarily, and then bam, we hit these new all-time highs that a lot of Bitcoiners probably didn't expect to happen so quickly in a given year. And now we're on the other side of it. We're like, when is this going to go up? When is this going to go up? So do you have a plan? Are you waiting for a certain price to enter back in, or are you really kind of sitting out for the next couple of years potentially?
No, I still have exposure there. I still own some Bitcoin, and I still have exposure through private equity investment that's in the space. So I still have exposure there. It was such a big part of my liquid net worth relative to what was a falling conviction in the near term, sort of clarity around a lot of sort of, A, okay, it's not trading like a neutral reserve asset, it's trading like high beta tech. B, high beta tech looks like it could have a really bad couple of months or quarters. C, the technicals look like absolute death, and they've crossed over in a way that has 100% batting average, bats 1,000 and foreshadows a 60 to 70% drawdown for the entirety of Bitcoin's life. And I just said, okay, that position is too big given those realities. For me, I think, I said to someone hardcore Bitcoiners have forgotten more about the technology than I'll ever know. Where I feel like I have an advantage against a lot of Bitcoiners is I've been advising institutional investors for 30 years. And what when those charts break down on a long-term basis, whether it's true strength index, whether it's moving average, convergence, divergence, on a monthly chart, the way they have broken down emphatically, what I can tell you is that, if you're counting on institutional investors to run it from, 90 to, 150 like that, if that's your plan, that's probably not going to happen without some major catalyst. That's not how institutional investors act. Those charts, they're going to sit there and just go, I'll wait. There's, at the very least, that suggests there's a whole lot of wood to chop for Bitcoin, technically, against both the dollar and against gold. And so, yeah, I think you'd easily go to 60. The real, for me, and again, this is an issue of position sizing. When it was as big as it was, this was really uncomfortable. For now, it's like, okay, if it happens, it happens. It's not the end of the world. What happens if we do get an all-out trade war? What happens if Liberation Day doesn't get turned around right away? What happens if, it's not like it's only Michael Saylor out there buying, money, borrowing money and buying Bitcoin. There's a whole lot of treasury companies now. And what happens if the world isolates the U.S. for a time, which is starting to look like it's happening, by the way, on some levels? What happened to those? if we go into a recession, which there's some metrics that looks like we're heading into it. What happens to the cash flows of those businesses? Do they have to turn seller? Are the treasury companies of this cycle, are they the sort of, the forced seller like we saw around FTX in 2022, right? The reason, in my opinion, why Bitcoin went below its prior cycle high. Remember in 2022, it's like, well, don't worry, Bitcoin has never gone below its prior cycle high ever. Then it did. And why did it do that? I think it was because there was just blood in the streets. People had to liquidate around FTX. And like, I bought a lot then because to me, it was like crystal clear. That was like, okay, like this thing's, and then you get, what's his name on Rogan saying it's going to zero. Like all the signs were there. To me, I just, like when I said, my Overton window is a lot wider than I think than most people's most of the time. And I think it's almost wider than almost everyone's now. Is like,
so you can see the mindset of some of these investors. What do you make of what Luke's thinking there?
I mean, first of all, can't chop him on the technical side. I said at the beginning of our show that the technicals look like a dog's breakfast, and that was probably giving it a bit too much color. So to be fair with you, yeah, it's not great, right? But I think that during periods of time where there's so much macro uncertainty, which there has never been a higher time, Venezuelan presidents getting snatched in the middle of the night, Trump wanting Greenland, all these EU tariff talks. We're seeing we talked about the Japanese bond yield spiking. There's a lot of this macro uncertainty and the technicals look like absolute garbage. I always revert back to my initial fundamental thesis. So let's go back to Bisher, 21 years old in a McDonald's car park with a few $1,000s in cash, waiting to buy Bitcoin from a random stranger on the internet that I met on a Bitcoin forum. So that was 2016 for me. And I was coming into this space not on the presumption that the number's going to go up to infinity. So I did have a bullish perspective that the number's going to go up. But I was like, there is a asset that I can hold and I can purchase that's completely outside and independent of the system, cannot be controlled, cannot be seized, cannot be taken from me. And as somebody who's a hardcore believer in free and capital markets, a free money is the most important aspect of what our society is built upon. So if the very fundamental capital layer, if the very fabric of our society, our monetary layer, which allows our capitalistic society to work, is broken, then everything else is going to be rotten because the core itself is rotten. So I revert back to my initial thesis that Bitcoin as a monetary network and a protocol is our best chance at improving the world and improving the status quo. Is Bitcoin more decentralized or less decentralized than when I invested in it 10 years ago? It's far more decentralized. Is there institutional adoption? Yes, there is. Are there more businesses, more mom and dad, small business shops accepting Bitcoin more than ever before? There's close to 39,000 small businesses in America that accept Bitcoin for payments, right? We've seen the success of Steak and Shake, right? Which is a simple American business. They sell fast food, burgers and shakes. They convert a portion of their profits into Bitcoin on the balance sheet, and they accept Bitcoin for payment that goes straight into their balance sheet as well, which is what every single business owner should be doing, setting up their own small Bitcoin treasury company. So the fundamentals have never been stronger. But in terms of what Luke is saying there, 30 years as an institutional investor and a capital allocator, everything he said is bang on the money, right? The technicals have broken down to the downside, both in US dollar and in gold terms. There's a lot of weakness there. There's a lot of concern and trepidation around how Bitcoin will trade if the US becomes isolated and everybody turns their back on it and US dollar hegemony breaks down. So there is concern about what Bitcoin would look like if it doesn't trade like a neutral reserve asset and it trades as just a high beta tech stock. So whilst all of those things are correct, I would just like to pause and say that more often than not, price is not indicative of value and does not always lead towards what's going to happen next. Price in and of itself is just the clearing price for the day. So whilst I completely agree with him, I'm not trying to disparage or disregard what Luke has just said. My perspective is very simple. I believe that Bitcoin has never been more fundamentally mispriced than it has been today. I anticipate Bitcoin to catch up in a really big way and fulfill its role as the neutral sovereign reserve level asset. But it's going to take some time for it to go through its adolescence, which is only 17 years old at the moment, Bitcoin, to go through its adolescence and resume its maturity and mature into that reserve level asset. So my bet, and this is where you make the most asymmetric upside returns in investing period, is when there's asymmetry involved. There's an asymmetrical opportunity between the price that Bitcoin trades at now and the opportunity that it presents. So it can fill this void as a neutral sovereign level reserve asset, which the world is screaming out for. The world is screaming for this thing right now. Look at the meteoric rise of gold and silver. And I'm not taking anything away from the precious metals investors. They've done well. And a lot of the silver bugs have been talking about this exact monetary reset for the last 16 years. And they held their silver from $50 an ounce in 2011 to now $95 US an ounce in 2026. It took them 14 years to realize a new all-time high. So that's conviction, and I'll give them credit where credit is due. But when you see such a massive repricing in neutral assets, such as precious metals, and you look at the price of other commodities that are not monetary. So gold and silver have monetary characteristics, which is why they've been repriced so violently over the last 18 months. But all commodities, we're talking about lithium, we're talking about boron, we're talking about cobalt, we're talking about base metals. Copper is having an absolute field day at the moment. Platinum, palladium, all the metals complex has done incredibly well. And soft commodities such as wheat, sugar, cocoa, they're all flying. Hard commodities and cattle, livestock are all flying to the upside. This is all those inflationary pressures that we talked about, but it's also a breakdown in the US dollar hegemony, because for a long time, America was the global liquidity backstop, and everybody can trust on the US dollar and rely on the US dollar to settle trades. And when we mean settle trades, we're talking about a Chilean textile manufacturer shipping textiles to Europe for them to produce luxury goods. They're not going to be settling in Chilean bolivars, or they're not going to be settling in euros. They're going to be settling in the US dollar, because that's the only thing that is truly trusted. So when the SWIFT system breaks down, when the US dollar system breaks down, and people are looking for neutral reserve assets, the first thing that they're going to run towards is gold and silver, because they've been proven to be money for 5,000 years. But that catch up, that fundamental catch up play, that it's not really a belief, because belief requires some level of faith. It's beyond that now for myself. It comes down to actual genuine conviction that a monetary asset such as Bitcoin, which is only 17 years old in the making, once it goes through its adolescence, which might take another year or two to resolve, it might not happen today or tomorrow. But when that resolution occurs, when we switch from high beta tech stock to neutral sovereign nation level reserve asset, because we're not going to be trading with each other in gold and silver. I can promise you that. In a multipolar world where no one trusts each other, the Americans don't trust the Europeans don't trust the Chinese don't trust the Russians, nobody trusts each other. We're not going to be trading precious metals with each other. I promise you that, not to settle trade.
There's no transparency in it. Like people go, oh, when it all goes to shit, we're going to have gold. And I'm like, yeah, but just really think about that. What are you going to do? You got a kilo of gold bar. First of all, is it really gold? If I'm the person on the other side of it, how do I even know that's actually gold? If I'm just the average guy on the street who you're going to try and trade something with me for your gold. Second of all, how are you going to carve off a piece of it? What level of danger is involved in walking around with a kilo of gold on you? Practically, how do you do that? There's all sorts of things people don't actually think through about these types of things. What Natalie said was, I tell you what I'm not going to do is I'm not going to sell my Bitcoin and try to get back in at the low. And the reason is because I know myself and I know my trading history. And as soon as I sell, it'll spike back the other way. She goes, it's just because she's been around it for a long time. And I just want to highlight this again. A lot of the time on Bitcoin shows, including ours, we're discussing noise. We're discussing market machinations. What Bish was just describing there is signal. And this is a really important language for serious Bitcoin investors to understand. One of my best friends in the Bitcoin world is Tony Yazbek, the founder of the Bitcoin Way. And I went up to him at his booth in Prague and I said, what are you feeling, mate? He goes, you know what? There's a lot of signal here, brother. It was like it was like he was talking about the Force,
Yeah,
in
yeah.
Star Wars. He's like, it's the I can feel the signal, man. Like that, and you could just see because he's such a dyed in the wool Bitcoiner, right? And that's the difference between people who are traders and people who are Bitcoiners. And most of you listening are not Bitcoin traders. You are Bitcoiners. You are you're aspiring to be. I'm a Bitcoiner. Bish is a Bitcoiner. He's not a trader. He's describing noise so his clients understand and can hopefully stick around long enough to become Bitcoiners who look for signal, not noise. And so, and the other thing I really want to point out is we, in this world that we live in today, we must, so first of all, before I get into that second point, know what you are, right? I have this discussion with my friends who are traders. I've got two friends. One is Mark DePola, who's on my podcast with me at Unemployable. Another guy, Ben, who I had on the Freedom Summit last year. These guys watch charts. Ben's a degenerate who'll sit up all night, chain smoking cigarettes, and he'll make $1 million in a night. He's literally made over $1 million in a day, but he has no life. He's pissing in a bucket for 3 days, watching the US stock market literally to make this kind of money. I'm not that guy. I don't think the intellect for it. I don't have the patience for it. I don't have the desire to do it. That's not me. What I look for is good long-term investments, and the price I pay for my laziness is volatility, right? But I have to, and when I look at it from all sides, I go, Bitcoin is a phenomenal technology that solves a real world problem. And what Bish is describing, in my opinion, priced at 2 trillion for a global monetary reserve asset, it's less than 1/10 of the value of the leader, which is gold. And gold is so far behind and so badly inferior for its stated purpose compared to Bitcoin that mispricing of $2 trillion for all the Bitcoin in the world versus, what is it now, 30 trillion for gold or something? I don't know.
36.
36 trillion for gold, right? So it's $36 trillion if somebody wanted to buy all of the gold in the world, which they wouldn't even know what they've got. They don't even know how much more is underground. They don't know where it is. Or they could buy the entire Bitcoin monetary network for $2 trillion if everybody was prepared to sell today. So when you look at them, that's what Bish is describing, the mismatch in the stated use case and the value being ascribed right now is enormous. And I think also what you said, Bish, is signal. So when you were talking about America just going, oh, Venezuela, yeah, we'll just take it, right? Greenland, let's just take that too, right? Like, this is massive global uncertainty, right? And the knock-on effects of America taking that oil, really, yes, people think, oh, they got it for the oil for themselves. No, what they did is they disrupted China. China have factories that process that heavy, dirty, rich oil that nowhere else in the world can process it. China purpose-built the factories. China was sending their engineers over to keep those facilities in Venezuela going so they could get this oil. And what it meant was China had a source of cheap oil. They didn't have to bid on the open market for their oil, which gave them a massive advantage. And America just went and said, that advantage is over now. You now have to bid on the open market.
It's our hemisphere is what they came out and said.
Yeah, it's our hemisphere, right? No more cheap oil for China. So all of this is signal that there's no trust. Chinese are not going to accept US dollars for any of their goods soon. Like, why would they? Why would they give that power to the US? So, and nobody trusts the Chinese, nobody trusts the Russians, and nobody trusts the Americans. So what's left? The leading solution is a global settlement technology called gold that nobody can audit. Nobody to move it, it's impossible and expensive. There's the inflation rate of gold is roughly 2% a year, which means in 50 years there's double the amount of gold above the ground than there is today. The UAE, I think, just came out and said they have discovered a gold reserve this week. So it's like just going, well, we just discovered that there's now an extra capacity for 2 million Bitcoin above the 21 million that Satoshi programmed. That's exactly what it's saying. So this is signal. And this is what, as Bitcoin investors, this is why we hold and we look at things, we think at a macro level, like I explained to you. Look at what dollars are worth in 10 years. They halve in value and at a 5%, or they drop 40% in 10 years. That's just math, right? And buying power. Real estate. I lost millions of dollars on Australian real estate in the best commercial precinct literally in the country. The number one searched precinct in the country is Township Drive, Burleigh Heads. That's where my prize property was. And from the time I could have sold it for north of 8 million to the day I sold it for 5 was 18 months. I lost $3 million in the best commercial precinct in the country, or at least the most searched on realcommercial.com.au in the last 5 years. And people, that's no headlines. They'll never hit the press in Australia. Why? Because it doesn't serve the narrative that Australian real estate is the safest and best place to invest money, right?
So, and on the topic of signal, this is one of the most exciting conversations that I've had in a long time, Hutto, because you and I are not shy of the podcast circuit. We end up talking about price and geopoliticals and all that other stuff, which is just noise. But talking about signal, let's take it really down to the micro level. Stormrake, as a brokerage, as a business, we charge people 2% to trade with us per transaction. We turn our clients' transaction volume into revenue, and that's how we pay our staff. That's how we pay our expenses, how we keep our lights on and run a business. We turn a portion of the revenue every month into Bitcoin on our own balance sheet. But we don't call ourselves a Bitcoin treasury company because that's not the business that we're in. We're in the brokerage game. And in terms of what we've done with that over the last 3-4 years, the Bitcoin has grown at such a rapid rate. The asset, that is the Bitcoin that sits on our balance sheet, has grown a factor of 300% over the last 3 years on our balance sheet. We have, at current prices, we've got about 7 years of runway that even if Stormrake as a business was not to make a single dollar, we make no profits for the next 7 years. I've got 7 years worth of runway to cover all of my expenses. All of my cash burn is covered for the next 7 years. So that's the level of certainty that Bitcoin gives me and allows me to operate without any sort of concern or scare or fear in a very competitive market. So people who want to open up brokerages and exchanges, you're welcome to come into the exchange and brokerage game. It's an incredibly competitive and cutthroat space. But the Bitcoin that I have on my balance sheet, because I advocate for and believe in what I do, and I put myself in the same position that I put my clients in, the Bitcoin has given me 7 years of runway at current prices. Even if we don't turn a single dollar in profit, and even if I don't add a single Satoshi of assets to my balance sheet, and let's say Bitcoin drops in value in half and we go down to 40K, which is even in the most bearish of bearish bear cases, that the biggest bears, they're targeting that level. Let's give them that. I've still got 3.5 years worth of runway. If Bitcoin gets to $200,000 over the next 18 months, which is where I anticipate it to get to, at least when it plays its catch-up move, I've got 14 years of runway. So even if price was to drop in half, I've got 3.5 years of runway. I've currently got 7. And if price was to double, which is where I anticipate it to go within the next 18 months, I've got 14 years worth of runway within my business. Imagine what that could do for the average small business owner and mum and dad shop operators, which is the backbone of the Australian economy, mind you. If they had Bitcoin on their balance sheet and they held it as a long-term buy and hold, they can give themselves a lot of runway, whether they're running a cafe, a panel beaters, whatever it is that they're doing. If they add a little bit of Bitcoin to their balance sheet and they just let it compound and they do it on a disciplined monthly basis, they can actually end up giving their business a competitive advantage over their peers because they've got a balance sheet asset on their balance sheet that protects them in any sort of downturns in the economy and gives them runway in how they operate.
And that's why this, like I like having these real discussions, and I like to bring in, let's say, negative sentiment like Luke, because it demonstrates or tests whether or not we really are believers in signal and really do understand what it is we've bought. I haven't flinched for a second this cycle at all. Like I bought Bitcoin yesterday, literally. And that conviction takes time to get. And what you described there, and I want for a thought experiment for those of you still listening at this point of the pod, what Bish just described, his Bitcoin is up 300% since they've been putting on his balance sheet. I told you earlier in the podcast that just since COVID began, January 1st, 2020, let's call it, that's the date that we knew we were going to have a global pandemic. The start of that was January 1st. There was $7,200. That's a 12.2x since COVID, 12.2x. And we're talking about a drawdown from 126 to 88 here, or 89 or whatever it is, right? But it's up 12.2x in 5 years against, banks saying, oh, make sure you save some money in the bank, right? Which programmatically in just 1 decade will lose half its buying power, 40% of its buying power. Just programmatic. That's just math. It's not even a maybe. Inflation is baked into the system. Earlier this week, I had a young Australian entrepreneur. You'll love this, Bish, because I'm going to reach out to you to see if you want to invest with me. I've got him coming back. But this kid has invented an app. He's an Aussie guy. I think he's maybe 21, 22 from Melbourne, I think. He DM'd me, said, Adam, can I show you this thing I built for Bitcoin? I said, all right, show it to me on a Loom. And it's an app that you can install into WooCommerce, Shopify. He's working on Shopify right now. You put it on any store, any online website, and it at checkout can say, do you want to buy in Visa, MasterCard, Amex, or Bitcoin, right? If you select Bitcoin, it brings up a QR code. You just pay with the Bitcoin out of your wallet. But as a vendor, as a business, you can program the app in the back end to say, pay it all instantly out to me in fiat, or pay whatever percent. Let's say your cost of goods sold are 50%, pay 50% of it out to me in fiat and put the other 50% into our Bitcoin wallet that's owned by our company in our treasury. So it instantly transacts and opens up your e-com store to Bitcoin payments that you as the vendor can either cash out for fiat, just like your credit card. People put in a credit card, they get paid in cash, like fiat cash, or they can split it in whatever percentage they want. When that shit starts to happen and people start to not only realize as a business I can accept it, but all of a sudden I've got a Bitcoin stack that I can do the same thing and pay in Bitcoin and not have to do, I'm buying a piece of land today. I'm jumping on my scooter here in Bali and going to buy this land. I said, can I pay in Bitcoin? They look at me like I'm strange. It would be so much easier for me just to go, can you just give me a QR code? I'll just scan it and you'll have the money in 10 minutes.
Yeah.
Right. And you'll know you've got the money because you'll see it on chain. I'll say it's done. I look at that and I go, sooner or later, people are going to wake the hell up and go, what are we doing with these goddamn banks that are just making up money, charging us fees? It's wild to me. And it's just a case of just letting people understand there is a much, much better solution out there. And it's still wildly undervalued. And all this other stuff is just noise. And from the noise, we must put the noise together and package it up to what is the signal here? And does that signal still fit with my underlying thesis that I've got a wildly mispriced asset? And I don't sell my Bitcoin because I still think, no, I'm not selling out at 100 grand. That's nowhere near what a global monetary network that's instantly auditable, that is, can't be corrupted. No, if gold's at $38 trillion, you're gonna have to pay me a lot more than 100 grand a coin or 2 trillion for my business. Up the offer, maybe I'll think about it, but it's not even close yet.
And I mean, also on that note about it being nowhere near where its value is, I actually think that we'll end up seeing it as a denominator. So a lot of the times we look at Bitcoin priced in dollars, priced in Aussie dollars, priced in gold. I actually think that Bitcoin will eventually become the denominator in which we're trading against, right? Because a lot of the times the hurdle rate when you're looking at, say, the S&P 500, or you're looking at beating the market, and you're looking at the risk-free rate. So when you hear about investors beating the market, they're usually talking about the S&P 500. When you're talking about beating the risk-free rate, you're usually talking about the US Treasury yield, right? Bond yields. So that's what people are talking about. When those denominators or those benchmarks are completely called into question, right? There is no longer the ability to say that the US Treasury yield is a risk-free rate, because people are concerned about the US government's ability to repay their debt. $38 trillion in debt. a quarter of which is due payable in 2026. So they need to refinance at much lower rates, which is why they're going to drive interest rates down and why Trump is politicking with Powell. But that aside, and you look at the S&P 500, which if it's priced in an ounce of gold, it's underperformed the price of 1 ounce of gold over the last 25 years. So imagine the collective productivity, the sheer size of the US stock market, how competitive the US economy is. It's got the biggest markets in the world, the biggest technology companies in the world, and even the humble S&P 500 has failed to outperform 1 ounce of gold over 25 years in terms of capital growth. So it goes to show you that we have a really fundamentally broken financial system and a fundamentally broken monetary system when the collective capital efforts of the US's 500 largest companies cannot beat an ounce of gold. It shows you that the actual productivity, the labor itself is being heavily discounted. All that ingenuity, look at how far we've come in 25, 26 years. We've had the rise of social media, the rise of search, the rise of the internet, we've seen the rise of AI more recently. And all of that cannot outperform an ounce of gold over a capital growth period of 25 years. That's why Bitcoin is the denominator, in my opinion. And that's why Bitcoin, whilst it is trading like a high beta tech stock and it does trade like a risk on asset now, that fundamental mispricing and that inability for the market to recognize value, when that catch-up play occurs and Bitcoin becomes a denominator, becomes the global reserve asset, that's where the value is going to be at its highest. And that's when you don't even think about selling your Bitcoin for dollars. You're thinking about how can I deploy my Bitcoin to get a better return on capital than Bitcoin itself, right? So if I was to invest in real estate, if I was to invest into the stock market, am I going to get a better return on capital than deploying my Bitcoin? If you were a gold bug in the early 2000s and we were doing a Bitcoin or a gold podcast back in the day, which would have been unheard of, but let's say we did that in the early 2000s, I would have been thinking, what's going to give me a better rate of return? The investment in this company or this real estate venture, or do I just hold on to my ounce of gold and outperform that both? And that's actually good. It's actually a good thing. It's actually being fiscally responsible. And it means that you only deploy capital when it's worth that deployment. So yes, there's going to be risk associated with deploying my Bitcoin into the stock market or into the property market or deploying it for ventures such as the Stormrake business, but it's still worth it because I can potentially earn a greater yield than what my Bitcoin itself can provide me. And that's where I say Bitcoin's the denominator. You won't even be thinking about selling it for cash or dollars. You'll only be thinking about deploying it for other investments when the time is right.
Yeah, and if what Bish is saying here is new to you, the book you need to read is called The Price of Tomorrow, and it's by Jeff Booth. And it talks about how people measure Bitcoin and other assets from inside a broken monetary system, which is dollars, right? And the reason we say broken is because it is constantly being messed with. Every single day, they're printing millions and millions and millions of dollars, and we don't know how much. So you got no idea what the footing is. And so it may, and the other thing for context is that for most of us watching this podcast, the vast majority, it wasn't until 1944 that the US dollar became the reserve asset. The reserve currency. We haven't seen a reserve currency change in our lifetime, but that happened, just routinely throughout history. And so when it breaks this time, which it will, at some point, the US dollar won't have that status. What is the next global reserve currency? And in a trustless world, because we've never been as connected as we are now, we've never had as much insight and understanding of geopolitics as we have now, what makes sense the most of the options on the table, right? And in my mind and in Bish's mind and in many Bitcoiners' minds around the world, there is only one answer. Gold is great because it's physical and it's not owned. It's a commodity. It's not like printed by any one country. And you have to actually go and do work to get it. Same as Bitcoin, but Bitcoin's just so much better and more efficient than gold by a country mile. And you're right, Bish. I think we haven't, as your famous saying, you're not bullish enough.
100%. And I mean, the data is there, Adam. The data is there. So I sent you a link, and I think it was actually in a circular way. I think you sent it to me initially. It's priced in Bitcoin21.com. It's a fantastic website. So what Adam and I are here talking about is not something that we're just trying to get you hyped up about to then go out and buy a bunch of Bitcoin with Stormrake, which whilst I'd encourage you to do, you actually need to have a certain degree of conviction in what you're doing and let the data do the talking. So go to pricedinbitcoin21.com and watch the US median home, watch other industrial assets, watch commodity assets, watch technology stocks, watch other currencies priced in Bitcoin in a year time frame, 5-year time frame, year to date time frame. You can pick and choose the one that you want. So if you look at, for example, the US median home, right, priced in Bitcoin, all that data comes available to you. And there is, only very short time frames where you get any meaningful outperformance against Bitcoin, but any real time frame, a year, 2 years, 3 years, 4 years, 5 years, anything that's meaningful to people who are trying to build and preserve wealth, Bitcoin's absolutely crushed it, and it will continue to do so over the next 5 to 10 years. And that's a really great way to measure your return on capital outside of watching the US dollar price or outside of watching the Aussie dollar price minute to minute on TradingView or your Stormrake app or whatever it may be. It's far better to then watch it priced in Bitcoin21.com and watch it against real assets, bonds, industrials, commodities, agriculture, and actually see what it looks like. So you don't have to take my word for it. You don't have to take Adam's word for it. We've had the time spent in understanding this market. So we're trying to articulate to you what we've spent years developing and understanding on. But there's sometimes nothing better than a quick visual that helps you put everything into perspective. And I can pretty much back everything that Hutto is saying here, that in 5 to 10 years, we're not only watching or witnessing the birth of a sovereign, neutral, monetary level reserve asset in Bitcoin, we're going to watch a lot of assets struggle to outperform neutral assets. Bitcoin, of course, gold has that category for a little while now and has been for 5,000 years. But this asymmetry, you won't get an opportunity like this again in our lifetimes. And that's why I'm as bullish as I am. And I'm hoping that 5-10 years from now, we no longer need brokers like myself to get in or out of Bitcoin, because Bitcoin is the universal standard. And then I'm on to my next unregulated asset class to have some fun in. But for the most part, Bitcoin is the ultimate opportunity for people who want to outperform and preserve their wealth.
I want to close with two things. Bish, you said something earlier about silver. The whole world's talking about silver and gold at the moment, right? Mm-hmm. What were the numbers on silver? What was it? 14 or 15 years ago, and then today?
Yep. So 2011, it hit an all-time high of $50 an ounce. Prior to that, it hit a $50 an ounce in 1980, and then the third time it hit $50 was in 2025. So there was a 14-year gap between all-time highs, and now what we're witnessing is it playing a massive catch-up move because it was undervalued and
what is it now?
95.
So right? It's gone from 50 to 95 in 14 years. I just want to remind Bitcoiners that on this January 1st, 2020, when COVID hit, just 5 years ago, Bitcoin was 7,200. We've had a 12.2x in a third of the time that it took silver to double. And everybody's talking about silver. And when they talk about Bitcoin, they're like, oh my God, oh no, the roof is falling in. I'm like, it's falling in for those of you that have been here for 5 minutes. Just chill out. Last week, Michael Saylor bought $12 billion, was it?
It was an absurd amount, 2.1 billion, I believe.
Oh, 2.1. I knew it was a 1-2.
Yeah.
$2.1 billion last week. Strategy bought in Bitcoin. He just keeps buying. And if you don't know who Michael Saylor is, watch some Michael Saylor stuff. I could guarantee you he's probably smarter than you. He's definitely smarter than me. And I think Bish should probably be prepared to yield to his intellect any day as well. Um,
Yeah, I've got too much of an ego to say that. I'm going to go ahead to.
Years ago, I was at a meeting in Los Angeles, and Elon was there. Literally, there was 100 people. Elon was in the room, and Elon said, "Oh, I've got a question." And somebody put their hand up, and Elon said, "Look, this isn't rocket science. It's actually much harder." But it's interesting because there are very smart people that continue to buy Bitcoin, and they do it for a reason. So look, guys, we've got to wind this one. I hope you found it helpful. And Bish, thanks for being willing to answer those hard questions where smart people have an opposing view. And I think this is the future of quality Bitcoin discussion. Can people sit with sound intellectual arguments against them and still be confident in their decision to buy and hold Bitcoin? And if they can, then that's great. That's where we want to get everybody, because Bish's mission is to not just get people to come in and buy their Bitcoin and then sell it, and then cry and never come back to the asset. As a business, what Bish will benefit from is people buying Bitcoin, learning more, and then buying more, learning more, and then buying more, right? It's we want people to stay in the asset because we look at the data, and what Bish said there, to go to that website, please do that, because when you actually drill that deeply into your psyche, that's what helps you hold when everybody is talking about doom and gloom and all the rest. And just stay calm, look for the signal, and stack sats. With that said, thank you, Bish, for coming back on, mate. Let's get after it in 2026.
Thank you for having me. It was awesome. And, your message is something that I always get behind. And yeah, I appreciate you having me on for sure.
My pleasure, mate. Let's get after it. Have a good one, guys. If you haven't already done so, please like and subscribe if you enjoyed this content. Bye for now. I hope you enjoyed that episode of the Sat Signal on Unemployable. Now, before you go, make sure you check out the 3 links in the description below. When you are a Bitcoiner, there are 3 things you need to do. You need to buy it, you need to store it, and possibly, if you're really into it, you might even want to mine it. But when it comes to buying it, we work with Stormrake, and the reason we do that as Australians is they are the easiest to buy from as a Bitcoin broker, the largest ones in the country. You have less challenges moving your money into their account to buy your Bitcoin for you. They offer a white glove service. They are Aussies. They have an office in Melbourne. They're a really good business to deal with, especially if you're first time to buying Bitcoin. So the way to contact them is go to stormrake.com/unemployable. They will look after you. When it comes to storing your Bitcoin, go to thebitcoinway.com/unemployable. They are the world leaders in helping people take full custody of their Bitcoin, so it will never be stolen from you. Don't leave it on exchanges. Take custody, learn to become your own security expert. And the last people we work with is Mining Store, also an Aussie company based in Melbourne. They can show you how to mine Bitcoin 24/7. So no matter what the price is, you just keep dollar cost averaging into Bitcoin using your own Bitcoin mining gear. To learn more, go to miningstore.com.au/unemployable. With that said, I hope you enjoyed the episode. Make sure you subscribe before you leave.